Good afternoon, everybody. My name is Jay Martin. I am an investor and the CEO of Cambridge House. Now, everything I do on this channel is done in the pursuit of improving my portfolio. Today, we're looking at the renewable energy sector. Okay, my next guest is the CEO of a strategically positioned copper exploration company, Rick Trotman of Barksdale Resources. Enjoy.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
All right, what's up, guys? Jay Martin here, CEO of Cambridge House, and I am joined now by the president and CEO of Barksdale Resources, Rick Trotman. Rick, how you doing?
Pretty good, Jay. Thanks for having me on today.
I'm happy to have you on. I'm looking forward to chatting and exploring this story in front of our audience and introducing you to our audience. I've gotten to know you over the last several months. We were introduced by a mutual friend and had some great lunches where you kind of opened the kimono and shared the strategy at Barksdale with me. Got me quite excited, to be honest. That's why I wanted to have you on the show. I mean, what I'm doing here is, I decide on an investment thesis that I'm quite excited about. That I want exposure to. In this case, it's the renewable energy sector. I'm quite cautious how I approach, but I've decided to look at copper opportunities in this case. What I do next is I make lists of the CEOs in the industry, shortlist the ones that I believe are the winners. I'm all about people. I'm very people driven in my approach. Everybody knows that. And when I talk about people, I'm looking for track records. I'm looking for management teams. I'm looking for the capital that you've attracted to the deal, right? And you've got some shareholders that I've known for a very long time and deeply respect, like Frank Holmes, who I'm also talking to today. So we'll talk about that. But what I want to start with, Rick, is let's talk about high-level copper to begin here. You could have gone into any industry with your background. You decided to charge it a copper story. What about copper made you think, yes, copper, yes, now?
Sure. Yeah. Well, look, copper is one of those interesting commodities that is kind of like one of those big ocean-going freighters, right? It's very slow-moving. They're very hard to turn, and they don't stop on a dime. And so when you look at the copper market fundamentals, you can be quite early, you can be quite late, you can miss cycles, but the key thing is identifying the key indicators that suggest that you're moving out of bottoms into tops, things like that. And right now there's a supply-demand disconnect that is kind of shaping up, and it looks like we're going into a structural deficit here probably next year. So I think from a corporate standpoint, being in a commodity early, having a good asset, having a good team, like you said, and really push out the sails when the wind is blowing, so to speak. That's the key to kind of getting good value and driving home results at the right time. Because as you know, you can't push on the string. So even if you've got a great deposit, if you're in a bad market, you're not going to have the best success. So I kind of look for that commodity complex to be shaping up. We might be a little early, but nevertheless, as long as you got the good asset and that commodity price curve is coming the right way, you're going to do well.
Right. I'm with you on that, and it's exactly how I approach this. Right. I talk to people like you, getting a sense of where the best spot for my cash is, to be honest, and I always pair these conversations with the macro thought leaders who understand the big picture trends, have been in more battles than I have, and they've got more in their brains. So today I'm also talking to Frank Holmes, Ross Beatty, E.B. Tucker, a number of people, and I really want them to try to poke holes in my thesis or support it and say, yes, you're right to be bullish on copper right now. And to be honest, that's the feedback that I'm getting. One thing I think a lot of investors don't understand, and until recently, myself included, to be honest, Rick, is I have lots of experience investing in the gold market, in the silver market, in a number of commodities, but it's a bit of a mistake to look at a copper discovery or a copper project with the same lens that you look at a gold company, right? Because if you found an economic high-grade gold deposit, you got a couple options, right? You can either raise the dough and take that through to production, like Darren LeBrenz at Pure Gold or John McConnell at Victoria. Alternatively, you can look for a suitor, right? And there's hundreds in the gold sector. If you're talking about junior, mid-tier, big caps, there's many, and I'm not oversimplifying this, but there are lots of options. right? And in the copper industry, it's not that way. To take a deposit to production is probably 10x the capital required and likely the time horizon. It's not realistic to expect a junior to do that. And so you have to remove that option. Secondly, when it comes to the suitors, there aren't hundreds. There's maybe 5 to 7 realistically, right?
Oh, sure.
So
Absolutely.
yeah, no, now, so do you find that to be the case when you're talking to investors? Do you have to communicate the plan a little bit differently? And is there a learning curve? Have you discovered that?
Yeah, so I think the key difference between a gold investor and a copper investor is exactly that earlier conversation that we were having about the cycles and understanding timing and things of that nature. So a copper investor will understand where they're at and where you can reasonably push a project based on the cycle timing. So for instance, if you have a very large porphyry prospect, things like Ross Beatty would have had 20 years ago. Those are very expensive to push forward. They're very large. They tend to be considerably larger than kind of the comparable gold asset, right? As far as tonnage, infrastructure, all those types of things. And so you have to understand how and when to push a copper project. Whereas gold, you're mostly reliant on price, and price in gold is mostly driven by people's sentiment. So it is cyclical, but it's not the same type of supply demand structural regime as you would have for other base metals, for instance. And so the investor mindsets are a little bit different. Gold investors want snappy, fast. Give me results. Who are you going to sell this thing to now? The copper investors understand that it's going to take a little bit longer to play out, but the space is far less crowded, as you said. So if you can strike the fancy of one of those big majors or mid tiers, it's a smaller playing field. So the likelihood of eyeballs being on you is greater, so to speak.
Right. Yes.
And,
okay.
And conversely, if you've got a nice asset in the copper space and you can push it successfully into being a producer, you have the potential to move up into that mid-tier, the small producer into the mid-tiers and be the consolidator yourself. So, you've got a lot of options in the copper space.
Okay. Now, I want to get into how that plan applies to Barksdale, how you're going to execute within that world. Prior to that, Rick, I want to get into your background a little bit. You made an interesting comment when we first got on the line here. You said, I'm all about projects over teams. I mean, that's your background, right? And you're very analytical, technical background, which struck me because I'm all about teams over projects. But the reason for that is I want the teams to be all about the project. I want to find the right people and have confidence they're going to worry and lose sleep over the project, because I can't. I'm not the geo.
Exactly. Well, that's completely understandable, Jay. The passion, the drive, the intensity, and obviously the intelligence and effort that's put into unlocking these assets, within the team is critically important. But I guess from my standpoint, especially when I was at the fund, we had a saying that you can always change what's above ground, so to speak, right? You can't change what metal content is in the ground and its distribution and its quality and its value. But you can change, management teams, board of directors, things of that nature. And so I'm always looking to have a fundamentally good asset that has high quality potential, right? I mean, who knows? Maybe at the end of the day, they might not all pan out, right? But you want to have the signs indicating quality at the end of the day in the asset itself. And then that's going to give you a lot more slack, so to speak, going forward. Whereas if you got something that's kind of marginal, you don't have room for error. It's all got to go perfect. Otherwise, it's just not going to work out. And so that's kind of what I mean by, going for asset quality above all else.
Okay, now you touched on this. I wanted to get into your background before Barksdale. You mentioned the fund. What were you doing, Rick, before Barksdale Resources?
Yeah, so before Barksdale, I worked at a private equity fund that specialized in the mining industry itself. So kind of invested in everything from kind of grassroots exploration, mining technology, all the way up to mine development. And so, quite a spectrum as far as dollars invested per deal, as well as the number of deals invested in. So That fund invested, probably $4 or $5 billion from obviously before I joined to the time that I left. But it was a great experience because I looked at literally hundreds, if not thousands, of different investment opportunities over the years, and I was kind of the exploration, minded person, and so I got to look at a lot of the earlier stage spivier things, as we called them, things that had a little bit of hair on them, less knowledge, more geology calls, and like you said, kind of betting on the jockey, so to speak. So it was a great opportunity for me because not only did I get to spend some time with some great investors that made, their limited partners significant amount of money in the past on great deals that went well. But then I got the experience of looking at all those files, meeting all those management teams, looking at all those projects around the world. So really increased my asset-based knowledge, so to speak.
Now, was it always in the plans then, Rick? Because if I look at that from a distance, it's like, at the fund, you acquire the skills that at some point you can take to the public markets and run your own company with success. Was that the strategy, or how did you come to end up?
No, it wasn't always the strategy. I mean, at the time, I was quite happy investing and hopefully making money on those investments. I think over time, what happened was that I got a bit itchy, putting money into an opportunity, but then not having the ability to actually be the value driver myself, right? And I'm sure you've been in the situation where you've invested in something and you think, oh, if they'd only done X, or if they'd only done this, it could have ended. Why didn't they go and talk to that company? Because they would have been perfectly, matched, and it would have been a great opportunity. Well, I kind of wanted to actually get out there and do that myself. I wanted to be the value creator. And so when the opportunity came about, without Barksdale opportunity presented itself, I felt like it was time. I had to, at the end of the day, bet on myself, so to speak.
Yeah, I love that. Okay. Now I want to talk about.
You've got to take risk, right? And I felt like it was the right opportunity and it was the right time. So why not bet on myself? Why not take the risk and get out there and pull some levers and make folks some money.
Right on. Okay, that's the attitude. So I want to talk about Barksdale now. And, like I said, I invest in people because I don't want to gamble on a drill hole. I want to bet on a strategy. So let's get into it, Rick. What's your strategy with Barksdale Resources?
Yeah, so the strategy at Barksdale is to basically make money on each one of our assets. And we have a portfolio of assets and we take a portfolio approach, but more so than that, it's making sure that all the assets work together and the sequencing and the timing and the overall steps that we walk through add value along the way. And we've got a couple of really great projects in Arizona that, I think can really unlock a ton of value for our shareholders and can really see our price increase if we get things right. And like you said, we, hit some nice drill holes. And then we've paired those projects up in Arizona with a new project down in Mexico that we think we have more immediate potential to kind of push that project along and get it into that development space. So what we really want to do, Jay, at the end of the day is we want to find an undervalued asset where we can put that proverbial dollar into it, add a couple of dollars on top of it to de-risk it, and then have the opportunity to sell it or put it into production at a much higher value down the road, right? And obviously we want to get that done as fast as humanly possible. And so that's the strategy of Barksdale. Okay,
now let's talk about these assets a little bit. Sure. I think I've heard you refer to Sunnyside as the crown jewel.
It is indeed.
It won't be the catalyst for near-term news. So we're looking at Mexico for near-term news, correct?
Yeah. So if I talk about it at kind of the 50,000 foot level, in Mexico we have a copper gold opportunity sitting in front of us that is kind of a just about drill ready project that has seen a lot of historic work, and we think that we can get in there, drill it, make it bigger, show that there's quality, and kind of drive it to that construction decision in a reasonable time frame, right? Okay. And then on top of that, what we have are a portfolio of assets in Arizona that are kind of options. They're almost embedded options within Barksdale story itself. And so one of those is an early stage exploration project. It's a blind target, but it could be a very meaningful porphyry copper discovery. At least that's what the geophysics points to, is that there's
And
porphyry
which is
copper.
this?
That's the San Antonio project.
Yeah. Okay.
So we're in permitting on that one. And so once we have those permits, we'll be able to get in there, test it, see if our thesis is correct, if there's a porphyry copper, if that's true. I mean, that'll add a ton of value. It's the first embedded option, so to speak, in the Barksdale story. And then, like you said, Sunnyside is kind of that crown jewel in the portfolio. It's the one that might take a little longer to get to eventually. It's in a permitting process itself. But once we have the ability to get in there and drill, we think that it can be a really big value add. I mean, the neighboring deposit, is a world-class asset. And we, in fact, just share this one big world-class asset. There's a property line dividing the two halves, so to speak. And so we know one half is worth, well, it was acquired for billions of dollars. The goal for us is to unlock the other half, the value that for our shareholders on our side of the fence. And
Okay.
so that could be that big home run swing, right? And so that's the other embedded option within the Barksdale story.
That's why you refer to Sunnyside as the crown jewel. It may take some patience to realize that upside, but you're very focused on it. I've seen pictures of your property. It literally is separated by a fence line. So who owns the other half of that asset, Rick?
Yeah, so the other half is owned by a company called South 32. It was a spin out of BHP's non-core assets a couple of years back. So it's an Australian $10 billion market cap company, more or less. Mine a lot of zinc, nickel, manganese, coal, things like that. So it's pretty well diversified. And they started stepping into North America, looking for kind of, at least from my standpoint, some jurisdictional diversification, getting out of places like South Africa, coming into places like the US.
Okay.
And so they're kind of the new kids on the block, but they're, solid company, strong cash flows, and they do things what appears to be in the right way. So I'm very happy to have them as our neighbor. And they're advancing this project. They've got underground declines going in. They've spent hundreds of millions of dollars since they bought this asset a couple of years back. And they didn't buy it for a couple of $1 billion. So it just shows you that there is that value potential. It's already been partially realized in this district. We just need to not mess it up on our side, so to speak. And get a little lucky with Mother Nature, and then ultimately just show what is actually there.
Yes. Okay, great. Now I want to wrap up by talking about your shareholder base a little bit. It's what initially piqued my interest. There's always the first trigger point that says, I got to take a look at these guys. Frank Holmes has been a dear friend and mentor of mine for a decade. So when I learned from him that his fund had invested, and I got a lot of time for his analyst, Ralph, very intelligent gentleman. And as well, I believe you raised some money from his Cisco Gold royalties, correct?
I did. Yeah. So when I first took over the CEO position at Barksdale, it's kind of back then we only had really one property, and it was kind of a niche story because it was lining up to start a permitting process. It was going to be a bit of time, and most investors, they're not well suited to kind of spend years waiting, right? And so what we did was we went out to folks like Ralph at US Global and Frank, a couple of other funds, got them into the story with the understanding that it's going to take a couple of years to play out, but the value potential is there. Put your money in, sit, wait, and we will take care of you at the end of the day. That we'll get the opportunity, and then it'll all work out. This isn't one that you're going to want to check in on a daily basis to see where the stock price is at. And they ultimately did that. They wrote the checks, and they're patient. And then subsequent to those funds coming in, we brought in Cisco Gold royalties. They were very active in the district already. They had made a royalty purchase and an equity investment in our former neighbor, Arizona Mining. And so they had made a lot of money on the day that Arizona Mining was taken out by South 32, and then they had this residual royalty over that asset. And so we targeted them because we understood they knew the rocks, they knew the district, they knew the potential. And so they would be the natural party to kind of come in and support us. Also being very patient investors, right? As a royalty investor, they're totally in line with that long game, right?
Yeah.
And so they also invested, and then later on, probably 6-7 months later, we brought in Tech Resources after it was Cisco, also being another patient long-term investor. And so what we did, Jay, is we just kind of went through the Rolodex and really selectively went after the folks that we thought the story would resonate with, and that also could be the types of shareholders we ultimately wanted. Those patient long-term folks that identified and recognized what that real value is down the line, and were willing to invest in us and take that risk. And so it's worked out, I think, fantastically since then. We've consolidated the district significantly, partially using some of the cash and shares. Well, the cash certainly that we brought in during those investments. We've more than doubled our land position in that district, and then we brought on the new project in Mexico. So, hopefully we will continue to unlock value, and the share price will respond. So that way, all of our patient long-term shareholders make a ton of money.
Okay, I'm with you. All right. So to summarize from my standpoint, the reason I turned my head, the reason I wanted you on today is I see, a multi-asset, strategically located asset, but early stage opportunity that's attracted some very impressive capital, the likes of the Cisco, Tech, US Global, long-term stable capital. That's what's nice about that, right? Rick, it's been awesome having you on and introducing this story to my audience, introducing you to my audience. I want to do it again. Let's come back in a few months and see what's happened. I'd love to do a follow-up piece with you. So thanks again for your time, and appreciate it, man.